To learn, you need to make sure you learn cheaply. I'm going to share with you a number of different experiences that I've gone through as a trader that you can learn from. Now, there was a situation, and I can't tell you the number of times this has saved my bacon as a trader. In 2020 with COVID, all right, there was a new trade execution we were all kind of trying. And I got away with it because I heard of a story about a guy that got absolutely destroyed. Okay, and I was doing the same thing as him. I just didn't realize one of the pitfalls of what we were doing. Okay, but he took the hard knock. I got to learn the lesson cheaply. And that's what I mean. Take what I'm going to show you now as the lessons I've paid for that you can learn cheaply. You do not have to make the mistake to learn the lesson. Okay, and if you are going to make the mistake, please, please, please make it a cheap mistake. Do not take a full trading account down to zero. It is stupid. Fine, take it down to 10%, take it down to 20%. Don't take it down to 100%. You don't need to do that. Okay? So what are those key career lessons? Well, the first thing is that strategies change over time. Go back to when I started trading in 2012, 2013, our core strategy was month end. Okay? The whole floor, there was a running joke on the floor. On the last day of the month, everyone would get up at 5 o'clock after the FTSE closed and be like, hey, I'm going to go request a draw now because we made money on the last day of the month. Honestly, that's how it worked. 2014, everyone just waited for the last day of the month because that's when we made money. This day, it doesn't really work. Okay? Strategies don't, unfortunately, work forever. And that's why when traders say to me, oh, teach me strategy, and we're going to talk about strategy development today. Teach me your strategy. Show me how. The reality is I can show you a strategy, but in a year's time, it's going to change. It's going to evolve. And if you don't know how to evolve with that strategy, guess what? You'll end up like a lot of the oil spread traders. I don't know if anyone trades oil spreads, but go back 5, 6, 7 years ago, oil spread traders did very, very well. And then the spreads blew out, and they all blew out, and never heard from the oil spread traders again. Okay, oil spread trading got automated. The machines took over. Strategies evolve. You've got to evolve with them. Avoid any rules of thumb. This idea of buy high, sell low, Santa Claus rally. How often do we hear that? Again, it sounds sexy on Twitter. Santa Claus rally, equities are going to rally. And suddenly, we put that into our framework, and what does that do to our bias? Oh, well, I can't sell the S&P because it's the Santa Claus rally. Rubbish. Okay, rules of thumb, just put biases in your head. Get rid of them. Okay, the all-in button in risk management. Always keep yourself in the game. Nothing's 100% certain. This happened to me in 2014. Okay, I didn't actually tell you the story. It was simple. I had a Reuters and a Bloomberg. 5 minutes before the ECB announcement, they were supposed to cut rates. It came out, the ECB is not going to cut rates. It was fully priced. What did I do? I lifted the euro dollar with 40 lots and I made 15 grand. It was one of my biggest ever up days. I was like, hey, I'm living the dream. I woke up this morning at 12, I went to the beach, I rocked up late and I made money. And all I did was sit in front of my screen. Right? At 12:45, Bloomberg Reuters came out and said, ECB didn't cut rates. What did I do? Oh, now it's confirmed. And I lifted 40 lots in the euro dollar. Okay, at that point, think about it. I had a $120,000 account, and I've lifted 40 lots in the euro dollar. And all of a sudden, market white boxes, volatility stop out, ECB cuts, ECB cuts. Okay. I sat there like an idiot going, hang on a sec, Bloomberg and Reuters just said no cut, and now they're saying they made a mistake and it was a cut. Okay, you do not have to, there is no such thing as 100% certainty. Okay, there's a high degree of certainty, but nothing's 100%. If you ever, and this is the thing, we get away with it so many times. Unfortunately, trading does reinforce bad habits. You get away with it, you get away with it, you get away with it, until you don't get away with it. And unfortunately, if you are 100% all in, that's when you blow out accounts. And then the game's up. Okay, so don't ever treat anything as 100% certain. Treat every trade the same regardless of the size. Okay, because what typically happens, we get married to something. We start with something small. It feels good. And all of a sudden, we get into that situation where, you know, because it feels right, because it was the right trade, we hold on to it, we add to it, and the next thing, we got 10 times the exposure. The next thing, we've lost 25% of our account. The reality is, treat every trade as an individual trade. Okay, treat it as, this is where I'm getting in, this is where the stop is, because this is the strategy I'm trying to execute. When it goes wrong, get out and move on to the next one. Okay, that's what trading is. It's just a game of repeating the same thing over and over again. Right? Unfortunately, one of the big mistakes I've made this year, and we'll talk a little bit about that, is when I do well as a trader, it's when I trade with a very structured approach. I come in, I look at the screen, I've got a whole bunch of signals going off. It says, sell this, buy this. I'm like, okay, sell that, buy that. Oh, this is boring. Okay, I made a bit, lost, made a bit, overall I made. That's when I'm trading well. Okay, when I'm trading poorly, it's when you'll see my Twitter account going off, going, you know, bearish thesis, bearish thesis, bearish thesis. How's it paid this year to be bearish the risk markets? It's been a real difficult trade this year. Okay, fine, we're down finally now on the year in NASDAQ and S&P, but have I been paid for being right? Of course not. Okay, so make sure that ultimately you stick to what you're good at. Stick to the structures that work for you. Don't get sucked into everyone else's games. Okay, if you learn to gamble with a small account, I love this. A lot of people say to me the biggest problem they have is that they don't have the capital, or they've got too small an account. The reality is you've got to learn to trade. It doesn't matter what the size of the account is. It can be $1,000, it can be $100,000. You have to learn those foundations. You don't need a $100,000 account to learn those foundations. Okay, if you're going to be a gambler with a small account, you're going to be a gambler with a big account. The result will be the same thing. You'll wipe it out. Okay. You have to be capable of seeing objectivity. This is something that a lot of traders struggle with in the beginning because they're not really understanding the game of trading for themselves. When you come into trading, you think of it as, you know, I'm selling because these 3 candles went down, or I'm selling because the Fed is now hawkish. Okay, and that comes from a lot of what we read in the financial journalism, a lot of what we read on Twitter. Unfortunately, we always want to assign the story to the outcome. The reality is you've got to see things as they are. We talk about price action. We talk about, you know, what is the price actually telling me? That's objectivity. See things as they are, not as you kind of, I think it's going down because of that. Okay, and we'll talk a lot about objectivity today, how you can become more objective. Right? Invest and trade what you understand. Right? How often do I see traders suddenly, you know, they're bond traders and the next thing they're trading wheat because Russia-Ukraine war, and I'm kind of like, stick to your lane, man. You're a bond trader. Right now, I understand why it happens. Keep in mind, if you were a bond trader in 14, 15, 16, you died a slow death. Why? Because of zero interest rate policy. The reality is that doesn't mean you must change lanes. Okay, you just need to become, you know, more focused on your market. You need to survive the lean years. Kind of, don't get me wrong. You obviously want to look in different directions, but don't step out of your lane, because the reality is then you take the focus off your market. Then you suddenly take losses in other markets, and the result is you lose structure and you just give away unnecessary chips. Okay, don't change your style. I've seen this with a lot of young traders. They're a scalper, then they're a swing trader, then they're an investor, and then it just goes horribly wrong. Stick to what you know. If you want to be a day trader, be a day trader. Don't suddenly start holding overnight positions. That's not going to work for you. Don't adjust just because it's not working at this point in time. Stick to what works for you. Okay, time is not a constraint. Warren Buffett's the perfect example. Again, what I said to you right in the beginning here was that trader, Mr. Consistent, 8 years, guys. 8 years, 350, 450 bucks a day. That's boring. Who wants to make 450 bucks a day doing a job for 8 years? Okay, there's no time constraint on progression. You all have to progress at your own time. Stop trying to progress like the guy next to you. Stop worrying about the guy next to you's P&L. Okay? And I like to use myself in this example is that, of course, there are traders that I look up to, that I admire for the things they can do, for that no limits trading, that sort of almost looks like reckless trading sometimes. Okay, and I admire them and I look up to them, but I don't envy their position. Okay, I don't want to be them overnight, because at the end of the day, I recognize I will progress on my own path, and I've accepted that, and it's important you accept that. You don't have to be a star trader in year 1, 2, 3, 4, 5. You will become a star trader so long as you stick with this. Okay? Define your circle of competency and stay within that circle. Okay, we've spoken a little bit about this. If you're a commodities trader, stay with the commodities. Don't think you're suddenly a forex trader, because again, if you want to suddenly become a forex trader, guess what? On that pyramid, you go back to the bottom, where you have to understand and build the foundations around forex, around FX, around whatever it is you're trying. That's out of your circle of competency. Okay. Number 11, when you start small. Okay, it goes without saying. Number 12, the downside of getting lucky is that we tend to attribute it to our skill. And I've seen this with a lot of traders. They think they make money, therefore they think they understand it. Get out of that frame of mind. Okay, you can get lucky and make a lot of money in this job. That's the game. Equally, you can do the right things and lose money. Accept that. It's important to be in that frame of mind. One of the framing questions I ask myself every single day in my journaling process is, did I get lucky today, or did I do the right things? It's always about, did I do the right thing? Was I, what was the outcome based off of what I did, not what was the P&L. Okay? Overconfidence creates blind spots. Okay? It goes without saying. Never compound an error, and this is something I firmly believe in. If you make a mistake, that's fine. I get into a gamble trade. Okay, not something I want to do, not an ideal trade. If you get into that gamble trade, my goodness, don't start moving a stop around, because that just compounds the error. And then the next thing, not only do you not have a 1 lot on, you have a 5 lot on, you're a mile offside, you now also through your daily stop, now you've rinsed 10% of your account, now you've kept the trade overnight, and it compounds, it spirals unnecessarily. Don't compound mistakes. And finally, brutal honesty and accountability, and this is something traders struggle with immensely. You have got to be honest about this job with yourself, not with me, not in your journal. You can tell me whatever you want to tell me. That's what's, you're verbalizing. At the end of the day, you, the one and only you, can solve your own problems. Right? There is this misbelief that you're all going to come here today and suddenly your problem will be solved when you walk out that door. It doesn't work that way. You're going to have to go and work at this game. You're going to have to take the hard look in, look at the numbers, look at the data, be objective with it, understand it, put that process of solving the problem in place and work at it. That's how this works. That's how any problem works, by the way. So those are ultimately the lessons that I want you to learn cheaply. Take them from me because I've been exposed to every one of those problems. Okay? You don't have to lose a ton of money making those same mistakes.